Nice. Video capture. Let's get out of there. And now, go live. Here we go. New one person here, and we're getting getting ready to get started. Alrighty. Go there and go there and go there. GD's in the house. Woohoo! MSRP user 6786. What's happening? Good evening, and how are you today? Alnor, what's happening? Billion, what's happening? John, Matt, Tito. All right, let's get started. Ooh, I cut my glasses. Give me a minute. Don't go anywhere. Glasses. I need my glasses. I need my glasses. Alrighty. Let's see, who do we got in the house? Ditto, Joe. Joe's in the house. Josh is here. Camilla. Did you see Apple chart today? No. Well, let's take a look at the Apple chart today, and let's see what's happening. I want to take a look at the advanced auto parts before the day's over. AAPL. Okay, what are we looking for here? Hello from Omaha, Nebraska. LeGray, what's happening? Raphael, there he is again. There you go. All right, so we're looking at the Apple chart. What am I looking for? I'm looking for 5 things. Number 1, the high, the low. Where was it? Where is it? Look at the movement. Up, down, up, down, up, down. A big pullback today. Well, let's see. Take a closer look. Before we do, does it make sense to even look at the stock? Now, I normally don't do Apple stock, but Apple stock is on Warren Buffett's list. So, yeah, I do it because it's on Warren Buffett's list. So, it's at 240 now. Uh-oh, I got to change that. We don't want to see that. Don't want to see that. I was given an example earlier today, and I needed that numbers. Okay, so the 140 is going for 435. You know, one thing I really like about Apple stock, I'm going to show you in a couple of seconds. Just hold tight while I look at these questions over here. Yo, the Savage Monkey. What's happening? Gail, good evening. Scott McFarlane, your YouTube screen is still not fit the screen properly. You're doing something different from the previous times. Okay, well, let me see if I can get this to fit properly. Okay. Yeah, it's not fitting quite right. All right, there we go. Now, let me take a look. Oh, there we go. All right, well, hopefully that's going to be it. Never trust dividend investor. Trust a growth investor instead. All right, Phil. Love to hear it. Thanks, Phil. Vote of confidence. Gotta love it. I am Batman. Cool beans. Dave Bazuki. Okay. Had Riley. Yes, I do have Riley. Did shares get called away? Not yet, they haven't. We'll take a look at Riley in a little bit. R-I-L-Y. I want to take a look at Advanced Auto Parts. Okay. So I'm kind of curious, Phil. You want to ask something? See how well you're doing as opposed to how well I'm doing? I'm more than for it. Is Tradeovate a good trading platform? King Dino, never heard of it. Sorry. All right, so let's take a look back to Apple again. Well, first and foremost, before I even go on, it is the beginning of the day. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride, let you see what I'm doing, ask me any questions you want. I'm looking for a simple, safe, predictable, consistent 1% per week. We got somebody here in the comments says, never trust a dividend investor. Trust a growth investor instead. No, I'd like to get, talk more about that if you're willing to come on and chat a little bit. Because I get over 50% per year. I'm kind of curious what you're doing as a growth investor. All right, anyway. All righty, on air. Yes. Hello from Omaha, Nebraska. David, how are you today? What's this live stream about? Okay, Alt Braves. We're looking for investing in dividend stocks for a simple, safe, predictable, consistent 1% per week. That's more than 50% per year, and that is basically doing covered calls on dividend stocks to gain a 1% return every single week. That's over 1% a week, 50% per year. It more averages around 60, 70% per year, but who's splitting hairs at that point? Craig, curious on how Tractor Supply, as a stock and a dividend-paying company. All right, Craig, I'll take a look at it, give you my opinion. TSCO. Okay, we'll take a look at that in a little bit. But still, nothing from Phil. Comes in, drops a line like that, disappears, doesn't have nothing to back it up. All right, is what it is. Oh, geez, Kramer's gay brother again. Yes, that's me. Thank you very much. Anyway, let's take a look at a couple things. You can't argue with what the stock is actually doing. Last year it was at a low, 165, shoots on up to 260, drops back down to 220. Now we're back at the 250 area, but you had a $10 drop today. Let's take a closer look at that. Now, a closer look. The bottom was 163. That was back in the middle of April last year. So here's the high right here. Just after Christmas, the day after Christmas. Cool. 260.10. Had a big drop. Let's go back to the last 30 days so we can see what we are looking for this upcoming week. Well, that's not that bad if you think about it. Now all right, imagine this if you will. The bottom's right here at 224. She shoots up to 250. Well, from 224 to 250 is is that 10%? No. 25. Yeah, that's a 10% move. So it goes from the bottom here, jumps up 10%, and now profits are starting to take. Well, they started yesterday, and they added a little bit more today. So what is it going to do? You have this big run up here. Well, of course you're going to have profit taking, and it's going to have profit taking until it's done. But here's something I really like about Apple stock. Let's check this out. Whoops. This is a seasonality chart, and if you don't know what a seasonality chart is, it shows you how does a stock react year after year after year based on only the season. Okay, January all the way to the left, December all the way to the right. This is one full year. The blue line represents the movement this year. The red line, I have it personally set for 10 years. But look at January 1st. To December 31st, a nice steady upward trend for the whole year. It kind of tells you buy Apple in January and you're good to go. Anyway, it is what it is. That just gives us an idea of what it did in the past. It doesn't really give us an idea of what's going to happen in the future. But here's the thing. If she goes up at a certain time during the year, well, normally it'll probably continue doing so. Alex wants to take a look at Siri. We'll take a look at Siri, Alex. Give me a minute or two. Hello from India. Namaste. Antoine. Excellent information. Glad you like it there, Antoine. Let's keep on moving forward. Trade of 8 is for futures. Yep, I don't do that. Sorry. Craig, curious on how tracks the supply. Okay, we're going to look at that one. Disney chart looks good and not sure about the options. Okay, Andrea, we're going to take a look at Advanced Auto Parts and Riot. Hold on a second. And Riot. Okay, Andrea, wait till you see what I have up my sleeve for Advanced Auto Parts. Derek, I have many non-dividend stocks in my portfolio. Should I adjust to more dividend portfolio? Now, Derek, I know absolutely nothing about you. Oksana, Kagdala, Borzalsta. How are you doing? Okay, so Derek, I can't tell you what to do, because I don't know anything about you. I have no idea what your risk parameters are. I have no idea what your goals are. I have no idea about anything. If you really want to chat, and that goes for anybody in the audience, if you really want to chat with me, even you guys are watching and listening after this is recorded, because this is being recorded right now, 9/28, February 26, 2025. So if it is after that date, yeah, you can send me your phone number and I'll give you a call. Don't put it on the public view. Send it as a as a DM, a direct message, okay, or an email. Now, you guys on YouTube, you have access to my email address. You have access to my phone number. You guys can text me. The weird thing about it is I don't mind. I enjoy talking to people about money and dividends and investing. I do. But I only have a very small niche that I stick to, and that's it. Because I am so old school, okay? I use the phone as it's intended, to call people and to talk to people normally. None of this texting crap, none of this emailing crap. You want to talk to me? Send me your number. I will actually pick up the phone, reach out and touch someone, as Ma Bell intended. Okay, I write stuff down. I don't really trust computers. I'm not on my computer as much as you think I would be. Okay, I do check my account twice a day. Why? I'm retired. I have no desire to go back to work. So I have to make sure my money is safe for me. Okay, now I got nothing wrong with going to work, but I've been working since 1973. I mean, come on, cut me a break. All right, Derek, we're going to get to that. Excellent information. Gadgets. Ultra. How are you doing today? All right. So I do like Apple. I don't have any Apple at this moment in time, but it is on not on my list, but it's on Warren Buffett's list. So that means it's kind of on my list too. All right, let's go back to where we were. But at this moment in time, I wouldn't be getting into a new position on Apple because of this right here. You get the big run up. Now it's going to be profit taking. The stock is going to drop. So Andrea wants to take a look at Advanced Auto Parts. Now, here's a funny thing about Advanced Auto Parts. We looked at it yesterday, okay? And we knew that today was going to have the, the earnings reports. So this was a shot in the dark. So let's pull it up and let me explain to you what I did and why I did it. And then you decide whether or not it makes sense to you. Now, let's take a look at the big picture. Here's the high, just below 90. Here's the bottom, right here at 35. Look at the movement throughout the year. A year ago, we're at 60. Now we're at 37. Okay, so we've lost a little over 50% from the value from the high. You like it now? Hold on a second. I got something really good to show you. So from $90, we're down to 37, which is a more than 50% drop. Okay, but look what it did. Shot up, pulled back, big drop, sideways, back up, back down. The bottom is right here in the 35 area. We're only at 37. Well, yesterday we were at 44, and I was looking at it at 44, and I said, this looks pretty interesting. But we knew the, the earnings report was going to be today. And when the earnings report comes, it's a 50-50 shot. Good earnings, it could go up. Good earnings, it could go down. Bad earnings, it could go up. Bad earnings, it could go down. It's all going to be up to the market maker and the overall market. So why did it do what it did? Now let me show you what I did yesterday and see if this makes sense to anyone. Okay, so see where Advanced Auto Parts is now? The high, the low, all that kind of nice, neat stuff. Let's zoom in and take a look at the last 30 days. And I'm going to show you what we were looking at yesterday. Okay? This is what we were looking at yesterday. I think that's right. Isn't that right? Yeah, yesterday. Okay? This is what we were looking at yesterday. 30-day high, 30-day low, right here, right now. Okay? 30 days ago, 47, jumps up to 53, drops down to 43. Nice drop. Okay? And then she jumped up yesterday. Okay, cool. Well, they had the earnings come up. Why did it jump up? Well, they have the earnings come up. And look, you should have seen the premiums yesterday. Why am I not looking at the premiums? Okay, so here's the premiums today. And the 44 is not even on there anymore. But yesterday, the 44, let me show you what I got it for yesterday. And it's like, see if this makes sense. Okay, Andrea, you're going to love this. You ready? Here we go. Whoops, nope. Right click, view trades. All right, here we go. So I bought the shares yesterday at $43.92. Well, today they're at 30 something. And why am I happy about that? Hold on, I'm going to explain it to you. Look at what I got when I sold the 40. Say I bought it at $43.92. The closest strike price is going to be the 44. Well, the 44 was paying $2.91 a share. So I said, are you kidding me? That was like 7 or 8% for 1 week. Great. So I decided to buy some. And then when I bought some, let's see if we can go back to yesterday's trade. I want to go back to yesterday's trade. Oops, back. Right there. Trade history. And for AAP. And there it is. You see? This is what I bought yesterday. $2.91. I bought it for there. Now, what I'm going to show you, I don't know if I can do it here. Can I? Yes, I can. Watch this. I'm going to click on this burger way over here on the right side, far right side. You click on that right there. Create a duplicate order. Okay, this is the order I did yesterday. Now I want to change it. Okay, there's that, blah, blah, blah. Confirm and send. Okay, now, do you see the prices right here? Well, these has the new prices on it, so it's not showing yesterday's prices. Well, anyway, yesterday's prices, it was at 8,000, but I only had to put up 1,500. See, now it's showing us 3,000 because the margin that I have. Now, I have a margin account. Now, I did the math yesterday, and it was a 28% return, which is crazy. That's never happened before. But lo and behold, let's get out of here. Let's go all of them. Okay, so if you see, there we go, fix that camera. If you see down here, this is my position, all right? So yesterday, I got 28% return from the money that I invested. I collected this big fat premium, an average price of $2.89. Well, look at what it's worth today. It's worth 3 cents. 3 cents. I sold it for $2.89. Now it's worth 3 cents. That's like, wait, for the fun of it, let's break the calculator. I'm kind of curious what that is. Okay, clear. 3 cents divided by 289. 289. 1%. That's not right. 1%. Yeah, okay, so that's a 99% discount. That's crazy. 3 divided by 43. Yeah. Anyway, so I'm actually going to buy it back tomorrow. So yesterday, I sold it for $2.89. Tomorrow, I'm going to buy it back for $3, and then I'm going to reduce my strike price down to about, let's go next day, today. Here we are today at 37. So I'm going to do the 40s. And the 40s, I'm paying 41 cents a share, which is more than 1%. So I bought it at 44. I sold the 44s, got 28%. That's crazy. That's crazy enough as it is. So now I'm going to buy that back at a over 90% discount. And then I'm going to turn around and sell the 40s and pick up another 1.5%. Well, that's just freaking crazy. Now, do I mind that the stock went from 44 all the way down to 37? No, don't mind at all, because I like Advanced Auto Parts. Now, I know there's some issues about it that might have some reasoning why it dropped like this, other than not, because I heard this morning, I didn't even actually check, because you guys think I actually on the computer all day long and research. No, I don't. I don't research it. AAP is on my list. Advanced Auto Parts is on my list. So do I really pay attention to the news? No, I watch what the other investors are doing. So if it's going up, well, yeah, we think it's going up. When it starts to go down, yeah, we think it's going to go down. And when she finds a new bottom, you bet your butt I'm going to jump in, buy some more, and take it back up again and make some more profit. So never, rule one, never buy something you don't understand or you don't know what's going on. Well, it was very profitable for this trade. So anyway, besides the point, let's go on to some other ones. I'm sure you guys don't want to hear all that stuff. Boom, ba-da-dum, da-da-dum-dum. All right, so Derek, yeah, if you want to give me a buzz, send me a number, I'll give you a buzz. I can't wait to see the Advanced Auto Parts strategy. But think of it that way, Andrea, seriously. I mean, so yesterday, we got that nice premium. This morning, she opened up okay, but then she just kept on dropping, okay? She opened up okay, and then just drop. So now it's here. What's going to happen tomorrow? More than likely, people are going to see this, jump on board, and then she's going to go back up again. Because you know what? I don't mind Advanced Auto Parts. Gadget Ultra, Bitcoin crashing. Don't care. Low about, yeah, no, I don't do Forex, dude. Sorry. Invest right. How are you? You've seen NVIDIA earnings. I know you don't trade it, but wondering if you have any thoughts. No, I have no idea what NVIDIA did today. So if anybody wants to chime in and give me a heads up on what happened with NVIDIA, because it is after hours and we're not going to see any movement in the stock until sometime tomorrow. All right, so anyway, that's Advanced Auto Parts. I like it. I actually jumped in yesterday because the numbers were just too good to pass up. How old am I? Francisco. You know what? I'm 61. I was going to say that's kind of rude to ask, but, I really don't care. Nothing to hide. I've been on here long enough so people can just easily check. Okay, Francisco, you want to take a look at Adobe, ADBE? I can tell you right now it's going to be a no. So not even any good point even looking at it. Now, the reason, Francisco, I say no to Adobe is because, well, it just doesn't fit the parameters. Okay? I think it's overpriced, too. ADBE, is that right? ADBE. Yeah, $440 a share. Yeah, no thank you. Okay, so you can tell by looking at right here. Okay? 30 days ago, here's your bottom. She shoots up, now she's pulling back. Yeah, the drop is slowing down, but it hasn't stopped falling. So until it starts falling and then turns around and goes back up, it's going to be a no. Besides, it's out of my price range. I don't like stocks over $300. Simone, I haven't seen you in a while. How are you today? Shane, Lind is solid and will benefit from H2O2 and energy sectors. All right, Shane, thank you for that. But I've never heard of the company, and it's just one of those things. If I've never heard of it, which means I don't know anything about it. So if I go do some research on it, I'm thinking to myself, why? Why would I go to research something I've never heard of? Now, I don't want to come across as arrogant or anything like that, but I like to keep my life as simple as possible. I don't want to do a lot of research on companies that don't really come out to be anything. Now, what do I mean by that? Well, I subscribe to a list. Somebody actually does the list. And actually not one person, a whole bunch of people actually do the list. Companies that have consistently increased their dividends over 20 years, over 25 years, over 50 years. Well, somebody assembles that list every single year. And that company's not on the list. So until where I go to get my information, until that shows up, I'm not saying anything to be disrespectful or anything, but I have no idea who you are. And that's not on the list, because when I update my lists, it tells me all the companies that have consistently increased their profitability for more than 20 years. And if that's not on the list, well, it's not on the list. So why would I want to take a look at it? It'd be nothing but wasting my time. And you're going to get to a certain point in your life where you find your most valuable commodity. Okay? More valuable than your time, more valuable than diamonds, gold, all that bullshit. Okay? There's nothing more valuable than your time, your attention. Okay? If you want to look at something, fine, be my guest. I've never heard of it. That does sound kind of bad, doesn't it? And besides, you got to give me the ticker symbol, because I have no idea who the heck that is. All right, let's keep on going. Simone, it's nice to see you back. Thank you for showing up. All right. InvestRight wants to take a look at NVIDIA. He says something about the numbers today. NVDA. It doesn't mean anything. Okay? Down, up, down, up, down, up. Okay, fine. So now it's going back up again. Got a 30-day high way over here at 152. Bottomed out down here at 114. Shot up to 145. Back to 125. Now we're at 131. Those are some pretty big jumps. I mean, each line's $5. It's not like the other shares that we'll look at 50 cents each line. This one's $5 each line. So what is it going to do? Well, hypothetically speaking, it looks like it's going up. But I was told that they had the earnings report after hours today. And we're not going to see that reflected into anything until tomorrow. Now, just for the fun of it, let's take a look at the options. What are the investors thinking? Well, look at the put side. 3,000, 10,000, 12,000, 1,300, 1,700, 9,000. On the option side, on the what do you call it? On the call side, 5,700, 3,500, 14,000, 1,600, 3,600, and 4,200. You know, it's not a huge difference between the two. You get 50% say it's going up, 50% say it's going down. That's a 50-50 shot. That's not a game. That's not a playground I want to play in. Okay, I like it when odds and probabilities are in my favor. Like if you have like 80% of the people think it's going to go up, well, yeah, I'll jump into that game. But where it's a 50-50, no, I like consistency and predictability. It doesn't have it. So I don't do NVIDIA. Anyway, let's keep on going. Boom, ba ba bum bum. It's Solana. It's ADP. Well, let's take a look at ADP. ADP. Tra-la-la. All right, ADP. I'm going to say no for this week. Now, ADP is on my list of stocks. But the reason why it's not on my list this week is look at where it is. It's at the high of the year. Why would you buy it? Or why do you want to look at it if at the high of the year? Now, I understand if you want to look at it, just say, all right, it's at the high, fine. It should take you 2 or 3 seconds. You take one look at it, all right, at the high, let's go on to the next one. There's no reason to look any deeper because once profit taking starts, it's going to take 3, 5, 10, 15 days. Well, yeah, it's confirming it's at the high. Great. Well, let's look at it in 2 weeks and go from there. Okay, other than that, there's no real other reason to look at it. Andrea wants to take a look at Intel. I like Intel, INTC. Now, I do have some Intel, so let's take a deeper look in this one. First thing I always want to see, the high of the low. Where was it? Where is it? Where is it going? Up, down, sideways, down, sideways. Now we're at 23.52, 23.40. Now, here's something. It's kind of hard to judge. Now, before they came out with the 24-hour trading, okay, it was easy to figure out whether the market maker was planning on pushing it down next year, tomorrow, or pushing it up tomorrow. Okay, and we usually see that with the last trade, 23.52, and then we compare it to the bid and the ask. 23.41, which is lower, 23.42, which is lower. Now, it looks from here as if the market maker is going to push the price down tomorrow. But we can't really tell because we're in after hours trading, and this number is going to be changing tonight. Just this one. Nothing else. Just that one. Because it's being traded tonight. So, but normally it looks as if the market maker is going to push it down tomorrow. Let's take a look at the numbers and see what it normally does. Okay. So, a year ago, we're at 43.14. The high of the year, 46.63. That was in the beginning of March of last year. Drops, go sideways, drops, go sideways. Look at the last 90 days. Now, the reason why I look at the last 90 days, the last 3 months, because I want to see if there is an identifiable pattern. Just take your little finger like this. High, low, was, is, down, up, down, up, down. It's not that difficult. It gives you an idea. Look, it goes down, up, down, up, down, up. Now it's coming back down again. What's happening right here? Because you get your high there, your low here. So yeah, it looks like it's coming down. Well, let's get a little closer to look. Last 30 days, right there. Okay, so here's the bottom here. Here's the top. Now, what usually happens at a top of a 30-day period? Well, it depends on how far it moved. Well, it went from 19 to 28. Well, 19 to 28 is a $9 move. Now, $9 on a $19 stock, well, that is very close to 45% increase. That's a big jump. No, that's not a big jump, $9. It's 45 to 48%. And what is that? A little over 2.5 weeks, 45% jump. Yeah, there's going to be profit taken, and it's going to come down to it gets to a point where people say, "Wait a second, this is good. I want to jump back into it." Now, I let my Intel go last week only because I had it down here and it shot up to here, and it only made sense to get rid of it. Do I have any intention of holding on to stuff? No. As soon as I get my profit, I'm out. I don't care how high it goes. Because taking it for the ride to go for the height, yeah, I could do what's called a trailing stop. But that gets a little confusing for a 9-year-old. Because remember, this strategy was for a 9-year-old. But a trailing stop would be a great idea. However, it sucks up time because you don't know how long. It could take a long time to go up. And I might have to hold it 3, 4, 5, 6, 7, 8 weeks. And that ties up my money from getting a consistent cash flow. So I've come to the conclusion, for me at least, that I want consistency. I want predictability. And I want safety. But that's me. Now, I'm not telling anyone to trade like I do. I'm just, helping you guys out and reading the chart, because I got plenty of years of doing this. I'm just reading the charts and giving you my opinion by using a logical, elementary approach. Now, the trading strategy I said was created for my 9-year-old daughter. It had to be simple. It had to be safe. It had to be predictable and consistent, and no way for her to lose. So for a 9-year-old, it had to be simple, safe, predictable, all that stuff. So I had to come up with 5 rules. And rule number 1 was never buy something you don't understand. Well, for my daughter, it was never buy something that's not on the list. Now, when I talk about lists, okay, all these little green dots behind me. Now, it looks like there's nothing here, but there's actually 141 companies. See? 141, 34, 33, 45. Nothing here. That's a holiday. But anyway, each one of these dots represent the company getting ready to pay a dividend. Now, a dividend's a portion of the profits giving back to the investors, and that's us. So when we buy stocks, we become the investors. So we are entitled to a portion of that money. And the little green dots tell us when we're going to receive a dividend if we actually own the shares. Because you actually got to own the shares in order to collect the dividend. But do I really want the dividend? No, I don't. I want to know when they're paying their dividend, because stocks have a tendency to go up in price or up in value just before the dividend date. So if I look at Valero right here on the 30th of January, why am I looking at January? I don't know. Let's go February, March. Okay, March. Okay, Suncor right here, S-U-N. Or Newmont. Ooh, nice. Alcoa. Anyway, besides the point. Suncor right here on the 4th. If I want to collect that dividend, I have to buy it before this date, the 4th. Now, when I buy my stocks, I buy them 2 weeks ahead of time on a Monday. And I do a covered call, because a covered call is simple, it's safe, it's predictable, it's consistent. All right, so back to the 5 rules for my daughter. Number 1, never buy something that's not on the list. Okay, now this is just an overall list. This is not my specific list. Okay, so for my daughter, it was never buy something that's not on the list. Now, you may see all of this, and you may think, well, that's way too much. Well, not when you're looking at it 1 week at a time. Now, this is just 1 week. All right, the 24th, the 25th, 26th, 27th, 28th. There's 113 companies on the 28th. 13 on the 27th, 15 on the 26th, 15 on the 25th, and 37 on the 24th. Okay? If it's not on the list, it's not. It's going to be a no or not today. And then next week, we go to the next list. Okay? 30 on March 3rd, 22 on March 4th, 32 on March 5th, so on and so forth. So for my daughter, never buy something that's not on the list. So for you guys, never buy something you don't understand and you don't want to hold on to all the time. Because to make it onto my list, you got to have certain criteria, and I'm going to share that with you in a second. Okay, as soon as I finish up this. Never buy something you don't understand. If you don't understand it, don't buy it. Rule number 2, never sell at a loss. It defeats the purpose. Okay, we're here to make money, not to lose. Okay? Now, there's always a way to get out of a losing trade. You just got to have time and patience. Rule number 3, make sure the company is consistently profitable. Now, when I say I like dividend stocks, and the name of the show is Dividend Investing for Weekly Cash Flow, what do I mean by that? The company has to be consistently profitable. Now, I already told you, a dividend is a portion of the profits the company gives back to the investors, and that's us. So if we're collecting the dividends, okay, I want to know when they're paying their dividends. Are they consistently profitable? And if they have 2 decades. Remember I told you I have criteria for my stock? Well, 2 decades of increased dividends. That means they're consistently profitable for a minimum of 20 years. Second is weekly options, which is rule number 4. Okay, rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. Because when I say I want weekly cash flow simply, safely, predictably, and consistently, 1%, I want to make sure I can trade it once a week without having to sit in front of my computer. I have no desire to sit in front of my computer at all. Okay, I got a call. I was talking with someone this afternoon, and he said, "Did you see what this did today?" And I said, "No, because I'm not going to turn my computer on until about 5 minutes of 9, which is true. Because after I do my morning trading, I got a morning trading group. I'm not trying to sell anyone anything, but I do have a paid subscription morning trading group where people actually watch all the trades that I do live, and you can ask questions. Fine, great. It's great if that's what you want. But after I turn that off, it usually goes from 9 o'clock until about 10, for about an hour. All right, sometimes it goes a little bit later depending on how many questions there are. But as soon as I turn that computer off, I don't look at it again until 9 o'clock at night, just before I go live with you guys. And I have no clue of what's going on during the day, because I really honestly, want to focus on something else. Okay? So stock market's not my whole life. This is just a hobby. In case you guys are thinking, is this what I do for a living? No, I don't. I'm retired. I don't do a whole heck of a lot of anything. As a matter of fact, I was gardening today. I was outside pulling weeds and mowing the lawn, putting plants in planters, because I'm enjoying the retired life. It's fun. I even took the motorcycle out for a ride. That was nice. Went and got some fish for my fish tank. My little fish tank. Not the big fish tank, the little one. So anyway, that being all said, I had no clue what's going on because I don't really look at it. Because I've been doing it long enough, I don't panic when things drop. Now, I got a margin call the other day. Okay, big deal. Just, a couple of clicks of the mouse, boom. So I sold something, done and over with. Okay, I'm doing rather well. I'm doing over 1% a week, and that's the goal here. 0 losses so far. Knock on wood. I don't know why people do that, but you know what? Superstitious. Not superstitious, but it's better to be safe than sorry. Anyway, that being said, let's get back to where we were. Oh, forgot. Sorry. Rule number 5. Check the numbers. Make sure the numbers work. I want 1% every single week. So, yeah, safety, predictability, and consistency. I forgot to throw in profitability. Anyway. All right. Let's get back to here. All right, so that's Intel. Yeah, I got rid of my Intel. So as soon as Intel falls down and finds another bottom here, some good steady footing, then I'll jump into it again. I have it on my list for next week. I believe I do. Let's double check. Yep, it's on my list for next week. What do I think about Tesla? I already gave you my opinion of Tesla. What would be your 3 dividend stocks to get into? Macy's, Kohl's, and Nordstrom's. Don't forget about Tractor Supply. Let's do that one right now. TSCO, TSCO. It helps if I had my cursor over there. Try it one more time. TSCO. No. Sorry. Wait, all right, let's go back to the beginning. All right, now. When I look at a chart, any chart I look at, I want to see 5 things. And it should only take you 3 seconds. 4 if you're a little slow, but usually 3 seconds. And what am I looking? How can you see 5 things in 3 seconds? Simple. You ready? High, low, was, is, and direction. Was it really that difficult? Okay, here's the high of the year. You really can't argue with that. Here's the low of the year. You really can't argue with that. A year ago, that's where it was. Where is it in now? Right now, where is it going? Well, that's where it was, and this is where it is. Okay, it's going to the upside. Okay. Now, I want to, before I move and take a deeper look into this, because time is something that we only have 24 hours. That's it. We all have a finite amount. Not infinite, finite means that's all we got. You got 24 hours and that's it. How you spend it is totally up to you. So, I want a quick look. High, low, what? Was, is, and the direction. Great. That part looks okay. I don't want to buy at the high. I don't want to buy it at the low. So this passes test number 1. Test number 2 is going right here to the numbers. What am I buying it for? 55.14. So I'll be looking at the 55.50s, which is right here. 80 cents a share. That is more than 1%. Well, yeah. Now I'm going to step number 3. Step number 1, chart. Step number 2, am I making my 1%? Great. Step number 3, I want a closer look at this chart. Okay, it gave me the overall. Now I'm going to go for the 90-day. Now, what I want you to do is just quickly, wait a minute, before I do that. A year ago, we're at 48, 49, somewhere in that area. The bottom of the year was the middle of April, 48.34. The high of the year, right there, 61.28, and that was in the middle of October. Okay, so the 90-day chart, again, 5 things. High, low, was, is, look at the direction, basically down, up, down. Okay, the direction is basically down. The movement, up, down, up, down, up, down, up, down. So it's coming down right now. So unfortunately, Tractor Supply is going to be a no for now. So let's look at the last 30 days. Now, the last 90 days get 5 things, remember, the high, low, all that stuff, downward motion. Then, now I want to look at the pattern. Okay? Up, down, same thing, same thing, same thing. So that's what it's going to be doing. It tells you how many times it does it in the 90-day period. Well, once, twice, 3, 4, 5, 6, 7. 7 times it did it. Okay, so let's go to the 30 days. 30 days would be right there. Here's the last 30 days. We see 1, we see 2. Okay? Down, up, down. So it's definitely in the downward cycle. So basically, what does that mean? Regardless of what the numbers tell me. Okay? I don't want to jump in as it's going down. You see here, high, and it went down, found the bottom, turned around, went back up. Well, what do you think is going to happen next? Well, it looks, hypothetically speaking, that it should keep coming down. Eventually, it will find the bottom, turn around, go back up. So I'm going to put Tractor Supply for next week because it looks like it's not going to be that far away. TSCO. Possibility for next week, but not this week. Sorry. All right, next. I think he's retired. Of course I'm retired. What is your full-time job? I don't have a full-time job. And no, investing is not my full-time job. Okay, I was on an hour this morning, and I just started now, so that makes it, 2 hours today? Well, the first hour, I was actually trading, because I share 3 accounts with you guys, which means I have 4 accounts I don't share with you. I got to take care of those. So that being, sorry, Kava, no. Sean, when I say never buy something you don't understand, okay? If you don't understand it, don't buy it. So apparently, Sean, you don't know how to read fundamentals. What's the high of the year? What's the low of the year? What's the average movement? Is it a dividend stock? Are they consistently profitable? If so, how many years have they increased their increased their dividends? Okay, if you don't know that, why are you putting your money into it? Same thing with James. Same thing with you, dude. If you don't know those answers that I just grilled Sean about, why are you buying SoFi? Seriously, take a look at the numbers. Seriously, take a look. Are they consistently profitable? If so, for how many years? And are you okay with that? Because I'm not okay with Kava because they don't have 20 years of increased dividends. SoFi, same thing. I want to be like you when I retire. Alrighty. Developed a skill in 1 hour trading. I cannot focus more than an hour. I get mentally exhausted and make mistakes. How about APP? What the heck is APP? I'm glad I found your channel. I'm blessed. Cool beans. What is APP? Let's go up here. APP. Well, now that's interesting. App Lovin'. That's from a movie Superbad. Who remembers that one? McLovin. App Lovin'. Really? App Lovin'. I can almost guarantee this thing does not have 20 years of increased dividends. Well, let's take a look at it because, you know, I tried to be nice to everybody. No. APP. All right, App Lovin', $331 a share. Okay, there are no dividends in the time period selected. So App Lovin' is going to be an app no thank you. David, how are you today? I think a net profit like 40%. A net, I never heard of them. ANET. Arista. All right. Well, let's see Arista then. ANET. Really? There are no dividends either. Now, you come to a show or a channel which is live. I like to think of it as a TV show. Oh, as a matter of fact, we are in talks of getting our own TV show. Yay! So I'll be on the big screen. I mean, I'm already on the big screen. Oh well. Anyway, so when I say this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, the name of the show here is Dividend Stock Talk, which is kind of strange because there's not any confusing words there. Dividend Stock Talk. It's only 3 words. How can you get that mixed up? Now, the reason I'm asking that, well, the last 2 stocks I just looked at, neither one of them had dividends. So why would you come to a dividend channel that talks about dividend stocks and ask about stocks that don't have dividends? That boggles my mind. Let's go. I'm a little slow. That's funny. Dell. Ooh, I like me some Dell. I just showed James a love. I'm on a reel. Okay, James, cool beans. I just found your channel. Accidentally came across channel. Okay, I came in the middle of it. Okay, yep. Okay, so buy and hold stocks wants to take a look at Dell, one of my favorites. Love Dell. Reason why I like Dell is look at the premiums on Dell. Look at those things. 115.96 to 116 is going for $6. I mean, come on. That's a nice rate of return. Let's take a look at the numbers. Remember, it should take you 3 seconds. High, low, was, is. Look at the movement. Up, down, up, down, up, down. Really not that difficult to spot that one. Okay? Now, all right, here we go. A year ago, 93, jumped all the way up to 179, dropped back down to 86. Last 90 days, high, low, was, is. Look at this movement. Up, down, up, down. Now we're at 115. Look at right there. Okay, you can see this is the 90-day. Okay, well, roughly 90 days. Down, up, down. Okay, right there. Today, yesterday, that's what I want a closer look at to give me an idea. Is this a good time to jump in? Well, some of you might want to jump in just by looking at it. Me, I want to wait another day. The reason why I want to wait another day, your bottom's right here at 98. She jumps up to 22. That's a $14 jump. $14. Now, $14 on a $98 stock, that is that's 15%. It's a 15% increase right there. Okay, then it pulled back a little bit. Now, I like 2 days to the upside because that could be enough pullback from 122 to 110. That's a $12 drop. Okay, $12 drop. Yeah, that might be enough. Because think about it. Shoots up, $12 drop. Well, now she's going back up again. Okay, what do the numbers look like if I do? Well, if I do buy it, the 116, because right now it's 115.95, and the 116 is going for 605. That's a huge number. But here's the thing. The high's there, the low's here. She shoots up. She should come all the way back, but if she's continuing going up, okay, we'll know tomorrow. Now, tomorrow, she's going to either open up higher or lower, and then we'll get a good idea. Is the downturn broken and now she's starting to go up? Or is this today just an anomaly and she's going to keep coming down? One or the other. Okay, now I play 1 day at a time. I don't trade daily, which means I'm not a day trader. Okay, I'm a weekly trader. I buy on a Monday. I like to be out by Friday. And then do it again the next Monday. I want simple, safe, predictable, consistent. I'm only looking for 1%. I don't want to be in front of my computer all day. Could I? Yeah, I could. But I have no desire to do that. Okay, I have desires to do other things. Hang out with my grandson, play in my garden, work on my mother's shed, stuff like that. Boring stuff. Old man stuff. Yep, I'm an old man now. I hate admitting it. I do. Don't laugh. You guys are going to be here eventually too. You'll be retired and you'll think to yourself, what am I going to do today after you wake up at 11 or 12 o'clock in the afternoon? Anyway. All right, let's keep going. So I do like Dell. As a matter of fact, just for the fun of it, just to get for the new people here, let's do a practice trade on Dell. See what it looks like. All right. Now, I like the 116s. All right, so let's do the 116s. Now, the reason I say I like the 116s is because look where the stock price is now. 115.65, so I can buy it at 115.94, which is basically 116. Okay, so let's get rid of this. Let's change the trade, okay, to a covered call right there. All right. And the 116s are right here. And I want to buy it right there. And here we go. Now, I want to go just to one contract. Because if I do 10, I have my computer set for 10 contracts. So it automatically fills at 10. One thing I really like about Thinkorswim, it basically sets everything up for me. All I have to do is come in and change the numbers. So if I don't want 10 contracts, I'll change it to 8. I'll change it to 15. I'll change it to 20. All right, so I'm going to do it just to one. That way you have an idea what one costs. It makes it so much easier. Now, I'm also going to change the order from a limit order to a market order. And here's the reason why. A market order, now some of you may know this, some of you may not know this, but a market order means the market maker is required by law, if he is advertising it at that price, that is the price he has to fill it at. Now, a limit order, you get to choose how much you're willing to pay or how much you're willing to sell for. And then it's a limit order. This is what I want to pay, and I don't want to pay any more. Okay? Or if you're selling, this is how much I want, and I don't want to take any less. That's a limit order. Unfortunately, with limit orders, they can, and sometimes they do, sit on the market maker's computer all day long until he feels like filling it. So I always go directly to the market order when I am first buying a stock. I got to say that part so people don't confuse it. Because once I own a stock, I'll do limit order because that I want when I want it. Okay, so market order I'll do because this is a double trade. Now, what do I mean by that? It means I'm buying the stock and I'm selling the option at the exact same time. See? Selling one contract and I'm buying 100 shares. So I buy 100 shares and I'm selling somebody the right to buy them all from me for the exact same price I just paid. Well, I'm paying right around 115.94. I'm selling it to somebody at 116. Okay? 116 right there. And this is what I'm collecting, whatever it is. Let's see what it looks like. Confirm and send. And here you have it. Buy one covered call to Dell 100s. That's the weekly. That means this option is going to expire next Friday. 7 March 25, next Friday. The $116 call option against the stock at the market to open. That's what that means. So here's my profit right here. $680 per contract. Now that sounds lovely until you hear how much 100 shares of Dell is going to cost you. $10,920. Now people think, well, I'm spending all the money. No, you're not spending the money. You're investing the money. The money is in your account to grow. That's what it's doing. Think of it as a seed, and the seed just changes its name. Well, this week the seed is Dell. And Dell, we're going to feed it, we're going to water it, we're going to collect 680. Okay, fine. Next week, we're going to take that 10,000, we're going to put it somewhere else and collect another premium somewhere else. As long as it's simple, safe, predictable, and consistent every single week, I really don't, I kind of don't care where it goes, as long as the company's consistently profitable and the numbers work. All right, so let's get the calculator out. All right, calculator, come on. There it is. Wrong place. It's supposed to be over here. Now, why is it so big? All right, that's better. All right, let's figure out what the rate of return. Now, the way to figure out your rate of return is take your profit, 680, and you divide it by what the stocks are costing you. Okay, the cost of the trade, including commission and fees, 10,920. 10,920. Okay, what rate of return is it this week for Dell? 6.2%. So yeah, I'm writing that one down for next week. I like Dell, and Dell looks like it's in a very well. I want to see what it looks like next week. So that's 6.2% for Dell, and I love Dell. But want to see something funny? Oh, not funny, but kind of frustrating, depending on where you are, of course. Now, I've been trading for a long period of time, so I get, I use margin. Okay, what is margin? Margin means I'm investing my money, and my broker is matching me dollar for dollar. So if I put in $100, he'll put in $100. If I put in $1,000, he'll put in $1,000. If I put in $1 million, he'll put in $1 million. What does that mean? Well, it allows me to leverage my trading, get a more rate of return. Well, this trade right here will get me 6.2%. Let's do the numbers on a margin. Okay, so let's clear this out of there. The profit's still going to be the exact same, 680. But what's going to change, rather than the cost of the trade, including commissions and fees, okay, the margin expenses right here, buying power effect, 5,138. That is my money that's being spent. So $5,000 of my money, well, let's figure that out. Divided by 5,138. Well, what's the rate of return now? 13.2%. Now, this is only for 10 days, which means by next Friday, if the stock is above 116, okay, because that's the call that I'm selling. If it's above 116 next Friday, I will get all my cash back, and I get to keep this profit also. But here's the other way of looking at it. Let's say the stock is at 115.99 next Friday. I get to keep the stock, I get to keep the money, and then the following Monday, I get to do it all over again and probably get the same amount of rate of return. Okay? I love Dell. The number's always great. Dell, Intel. There's a few companies that the premiums are really good all the time. Dell is one of them. I love Dell. So I got Dell down for next week. Not this week, unfortunately, because we see where it is at the moment. I'll go back to the beginning. Okay? It's not a clear-cut sign to jump in. Okay, here's the bottom here. Shoots up, pulls back. Tomorrow morning will give me a better idea. Is it going to be higher than 115 tomorrow, or is it going to be lower? If it's lower, I'm going to have to wait. Okay, because I look for 2 up days. See right here, here's the bottom, 2 up days before I jump in on the 3rd day. Now that's me, that's my rule. Okay, it's not guaranteed. You just have to decide what it is for you. Okay, Raylan, I appreciate you want to co-host with me. Thank you, Raylan. I take that as a compliment. However, I don't know you. If you really want to co-host with me, send me a number. I'll give you a call. We'll chat. Let's move on. All right, so I do like Dell, but not this week. And did I write Dell down for next week? Yes, I did. Next on the list, SMCI. Okay, Rambo Bambo. Now, Rambo Bambo, you're new here only because I've been doing this for a year, a little over a year. And I'm good with names, and I've never seen that name pop up before. So, SMCI. I always tell people I got 5 simple rules. And rule number 1, which you are breaking at the moment, never buy something you don't understand. Okay? If you understood SMCI and you're serious about putting your money into SMCI, I would say more power to you. It's not something I want to do because they don't have 20 years of increased dividends. And you know what? Today's Wednesday. So for the fun of it, let's go and take a look. How many stocks are there in the stock market? Okay, we're going to go to FinViz, which is a financial visualization company. Gives you all kinds of details on stocks. I want to go to the screener because the screener allows me to decide what stocks I like. And, free spreadsheet. Yay! No. Okay, and here we go. Check it out. 9,938 companies. Okay, a couple of days ago it was 9,936. Today it's 9,938. Okay, so out of all those companies, what makes you think I have any desire whatsoever to invest into SMCI, especially when it doesn't fit? Okay, now I'm looking for companies with 2 decades of increased profitability. SMCI does not have it. So SMCI, that's a no. Mary June, Procter & Gamble. Procter & Gamble. Empowerment assets. Growth is the key. Plus, what are the end goals of the company? We need to know the cash flow. Well, empowerment, I'm going to agree with you 100%. Alrighty. Just found your channel. Okay, came across the middle of it. Blah, blah, blah. Dell is nice. Didn't know it was that kind of show. I trade options, but I like your outlook. James, thank you. Hoy hoy bo. Hoy hoy bo. I'm looking up what a dividend means, but I am still confused. Would you please explain? Okay, a dividend. Okay, look at it this way. I'm sure you've had this scenario happen to you. Yo, bro, I'm going to the store. You want anything? Yeah, pick me up a pack of cigarettes. Pick me up some smokes. Pick me up some beer. Whatever. Here's $20. Okay, great. Here's your change. No, you keep it as a tip. Same thing, but there's a little bit more legalities to it. Basically, you're buying a company, a good company that you know of, something you understand, someplace you want to park your money and just leave it there because you feel it's safe and you feel it's a good investment. Because that's what we're here for. Looking to invest our money to make a little bit more so that our retirement is a little bit more fun. Okay, I'm having a blast. I could have a little bit more, but I'm working on it. But here's the thing. A dividend is a portion of the profits in which a company pays to the shareholders. Now, there are 3 different kind of companies out there. We can take advantage of 2 of them. Okay, company number 1 is a private company, which means you cannot invest in it. 2 is the other 2 are publicly owned companies. Now, the publicly owned companies come in 2 categories. Okay, 1 will give dividend, which is a portion of the profit. The second one takes their profits and invests it back into the company, doesn't give you anything except for hypothetical probability of increased value throughout the years. That's it. You're giving your money to a company and you're saying, hey, here you go. You do what you feel is right, and hopefully 5, 10, 15 years, you will be right. That doesn't work for me. Terribly sorry. Okay? I want the company that's going to share the profits. Hey, we made this much. Here's your share. Well, that makes sense to me. Okay? We made this much money, with your help, so you get to share in the profits. Those are dividend stocks. Now, we just looked a couple of seconds ago, 9,900 and however many. Out of all those, only about 5,500 of them pay dividends, which means the other 4,000 or 5,000 don't pay dividends. They take all the money, put it back into the company, and the company grows faster. So here's a troubling question, one that you should think about clearly. Do you want capital growth for the future, or do you want cash flow? Okay? So if you're looking for capital growth, if you're looking to buy low and have the thing shoot up high and fast, you're in the wrong place. That's not what I do here. Now, when I was younger, yeah, that was great. Fine dandy. Buy a stock, put it there. Let's see what it does in a couple of years. Yeah. Now, when you're 61 years old, okay, and your money comes from your investments, okay, I don't have as much money as you think I do. So I make 1% every single week, and that 1% of my capital allows me to retire and live comfortably. I have no desire to go back to work punching a time clock. I've been working since 1973. Now, I could, and a lot of people say, well, you're still healthy. You should still be working. I'm glad you have my life planned out for me. Yeah, no, thank you. So, let's take a look at Procter & Gamble. Move on. So, hopefully that answered your question. I have a tendency to get a little carried away. Growth is key. Empowerment, you're absolutely correct, but you got to ask yourself, empowerment, APP is trash. I'm not going to say it's trash, but it's not something that I would invest in. Okay? However, I like companies that are consistently profitable and consistently grow. Now, Procter & Gamble's been around for over 100 years. They've seen a lot of crap, and they still increase their dividends to their shareholders every single year for more than 5 decades. Okay, the question is not, should I buy it? Well, the question should be, when should I buy it? Because you should. No. Sorry, I didn't mean to say that. Why wouldn't you have Procter & Gamble on your list? The company's over 100 years old. They've increased their profits or their dividends for more than 5 decades. Consistently. That means higher and higher and higher dividends every single year. Why isn't it on your list? Okay, it's on my list, but do I own it? No, I don't own it. I buy it and I sell it. See, I buy it low, I sell it high. Buy it low, sell it high. Buy it low, sell it high. And I just follow it along. Now, if I bought it a year ago at 158, well, she jumped up to 180, but now she's at 170, and probably next week she'll be back down again. Who knows? Okay, it goes up, it goes down. I'm looking for consistency of profitability, safety, and predictability. I want to know what I'm going to make every single week. Okay, and if I average 1% a week, that works for me. And I come from a generation, sorry if you guys might understand this, might not understand this, I don't really care, because I'm Gen Xer, we really don't care. It's weird. Okay, well, don't you care about? No, we don't. Okay, so I'm just sharing information. I'm doing this for my children and my grandchildren because eventually someday I'll be gone, and I don't want everything I have up here to go away unnoticed. So my children are actually finally paying attention. Papa G's not working anymore. Well, where's he getting his money from? Where he always got his money from. Anyway, let's keep on going. All right. All right, so a year ago, Procter & Gamble's at 160, drops down to the low of the year, middle of April, 153. Here's the top back at the end of November at 180. All right, look at the last 30 days. Okay, here's the last 30 days, right over here. 168, drops down to 163, shoots up to 174. It looks like, hypothetically, that this, today, could be the beginning of profit taking. So, which means we'll just wait 2 weeks, wait for the profit take a look at it again. Are they done with the profit taking? Find a new bottom, shoot back up again? Well, we'll see. But until then, for me, not today. Not this week anyway. But I will put it down for next week. All right. Dun-dun-dun. Oh, no. All right, here we go. Amal, is that right? Amal? A-M-A-A-L, Amal? Okay, Enbridge. Now, E-N-B. Now, Amal, when I say I want companies that have weekly options, also, remember rule number 1, never buy something you don't understand. So why would you possibly want to look at a company you don't understand? Now, the reason I say that is if I'm looking specifically for companies that have weekly options and dividends, you spit out Enbridge. I can't get weekly cash flow from this company unless I sit in front of my computer every single day, and that ain't happening. So Enbridge is going to be a no because it has monthly options, and the monthly options, the numbers just don't work. Craig thinks that's funny. Sherry, how are you? Oh, Sherry, I got to show you my nice little toy I got. Okay, those envelopes, yeah, I finally opened them up, and I finally said, you know what? I'm going to go out and get this. But I got a picture. I'm going to send it to you. Kivo, do I do covered calls? Well, yes, I do. Kivo, you only get old once. That is true. You only get old once. Mary June, did you trade at all when you did work? Or did you just start after retirement? Just curious. No. See, all right, so Mary June, when I got out of the service, oh my God, back in the 80s, I took an apprenticeship with an exhibit builder. And the exhibit builder signed a contract with a big company, and he picked up what he wanted, and he went overseas. So I said, well, what are you going to do with all this stuff? He said, well, throw it out. And I said to myself, no. I just spent 4 years learning all this stuff, and you want me to throw all this stuff out? So I took all that stuff. I opened up my own company. I ran my own corporation for 13 years, I think it was. So I was making so much money, I had to figure out where to put it. Okay, so, the houses, the cars, all that crap. But everything I bought, everything I did needed time and effort. And then when you get to a certain point, all your time is going here, and it doesn't make any sense. So where's the safest, simplest, easiest place to put it? Well, the stock market, I have no employees. I get almost no overhead. The only overhead I have in this is the brokerage fees and the electricity to turn on the computer. That's about it. No location. I can do it from anywhere in the world. There was 5 no's, and I forget what they are. No overhead, no employees, no location. There was 2 more. I forget what they are. But it's so easy and so simple. And I can make the same amount of money now working 1 hour a week that I used to make working 40 hours a week. So I'm thinking to myself, well, that's a no-brainer. 1 hour a week, make the same amount of money? Yeah, okay, sign me up. All right, so no, I did trade. I've been trading since the 90s. Okay, so my first 5-10 years, not that good. It wasn't until 2008 when my 9-year-old daughter says to me, Daddy, what are you doing? As a matter of fact, I haven't shown this in a couple of days. So let's go take a look at the princess. Where is it? It's not there. Okay, hold on. We'll find it. The 10-minute trader. Let's go there. All right, right there. View all. This goes to my social media sites. Come on. All right, it's going to take a little while to get here. I'm going to go to my YouTube channel. Okay, that's all my social media sites, blah, blah, blah. I've been doing this for a while. Okay, so look at this. We're up to 897 videos. Okay, over the past 15 years. So I'm going to go to videos. And now I want to go to the oldest videos. And there's the princess right there.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad doesn't let me call him that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you with the best return.
All right, so that's JC.
List number 1.
There's me, 15 years ago.
21 days in the month of March. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends. Hey, seriously.
All right, so why do I show you this?
Just one company.
Well, the reason why I'm showing you this is because I've been doing this for a while. Now, 15 years ago, when this information was available, there wasn't anybody wanting anything to do with it. It wasn't until I could stand in front of a phone. Imagine that, stand in front of the phone and saying, hey, this is what I'm doing. People started getting interested in it. Okay, so that's me 15 years ago. Believe it or not, I still have that shirt. I don't know where it is now, but I still have it. Last year I did a video of me in that shirt, standing in front saying, hey, look at the shirt. But it had holes in it. It's 15 years old. Who has a t-shirt for 15 years? Anyway, let's get out of that. Okay, back to here. All right, so that being said, I've been doing this long enough. It makes sense to me to do things a certain way. All right, now I am a little lazy. I have no desire to change, okay? Because you know what? I come from that time frame where we went to work 8 o'clock Monday morning and we finished up work on Friday afternoon. Well, I'm basically doing the same thing, except for now I'm only working an hour a day. Okay, 9 o'clock Monday morning, I jump on, we do all our trades. Okay, Tuesday, Wednesday, Thursday, we're on for about a half hour just taking a look at what our trades look like. Because nothing really changes that much from one day to the next. But Monday is where we buy all our stocks and we sell all our options and we collect the premiums usually on Monday or Tuesday because this is a greater time value. Because let's pull up one that I like. Macy's. Let's pull up Macy's. I like Macy's. Macy's was my number one performing stock last year. It's like I tell people that. Look at this. This is funny. Okay. Look where Macy's was last year. Let's go this way. It's easier. Macy's was at a high at 22 last year. Now, I was buying Macy's last year when it was 24, 25, 26. Well, that was in January, February of last year. Well, now, March and April, we're down to 22. And it keeps going down, 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 down. And people say, what do you mean Macy's was your best performing stock? It went down. Yeah, it did. But you're missing what I am doing. I am buying the stock when it's at the low. Let's zoom in here for a second. Okay? I'm buying the stock when it's at the low. I'm selling it when it's at the high. Not at the high, but when it goes up. Now, I'm doing a covered call, which is a simple, safe strategy. Now, I say the simplest strategy is buying the stock. That's the easiest one. Unfortunately, there's no profit in buying it. You have to sell something in order to make a profit. So if I buy it and sell a covered call against it, which means selling somebody the rights to buy it from me at a certain price by a certain date, usually on Friday, okay? Because I like weekly options, do it every week. So buy it and I sell it because I'm only looking for 1%. Okay, right down here, 18. So what's 1% of 18? Well, it's $1.08, like $2. So from here, I'm out by the time it's here, and I make my profit. And what happens? It shoots up and comes back down again. Well, then I buy it again, and then when it goes up 1%, I'm back out again. And then I buy it again, and I'm back out when it's up 1% again. And then I buy it again down here, and I buy it again down here. It is my number one, well, actually, it's my number 2 performing stock last year, Macy's. I made over 50% on Macy's last year. Anyway. Next. Okay, did you trade? No, I was not. I was never a professional trader. Okay, this is all just a hobby for me. Okay, so you guys might think this is my business. Yeah, no, it's not. It's just a hobby. When I say I'm retired, I don't work anymore, well, that's kind of not true. Okay, because I'm down at my mom's house rebuilding her shed. I go to my son's house and I do this and I do that. I go to my other son's house and I do this and I do that. I'm still working. I'm just not getting paid. You know how you go to work every morning, you sign in, you get a paycheck at the end of the week? Well, I go to my mother's house and I go to my son's house and I'm doing all the work. And at the end of the week, I get a thank you and then they make me dinner. That's it. All right. Anyway, but that's what you have to look forward to when you retire. You get to spend your time the way you want to. Beard Dude Dad. Can you show a trade when you already own the stock? Would that just be a single order? Yes, it would be. Okay. Any additional criteria when you already own the stock? Absolutely. That's a good question. Well, let's take a look. Now, I can't show you one that doesn't already have an option sold against it. Because every one of these, if you take a look, okay, view trade, okay, buy a stock, sell the option, buy the stock, sell the option, buy a stock, sell the option. See, my money's working for me all the time. I don't have any positions that are unencumbered by an option against them. So every stock that I own, I've sold somebody the rights to buy it from me. But if I was going to, let's take a look at Advanced Auto Parts. Now, if I own Advanced Auto Parts, which I do, at $43.92. Okay? So I own it at $43.92. Now, first thing I want to do is I want to put it over here. Okay, now I bought it yesterday at 44. Now it's at 37. Okay, did I lose? No, I didn't. Okay, I'll explain that in a minute, but let me just show you. Now, if I think I own 800 shares. 1, 3, 4, 6, 8. So I have 800 shares. Okay, so I'll go into trade. Here it is right here. Now, I have it at 44. Now, it doesn't make sense for me to sell the 44s because there's no value in the 44s. Okay, the 44s are right here. Right? There's no value in the 44s. So I sold them yesterday for 2 and change. Okay, right down here. See, I sold them yesterday. See the date? Right here. $2.89 a share. I sold them yesterday. Today, they're worth 3 cents a share. So tomorrow morning, I'm going to buy them back at 3 cents a share. So think of it this way. I bought something for 3 and I sold it for $289. That's a big profit because right now it's worth 3. But I sold it at $289. So the stock market is someplace where you can do things backwards. You can sell something first and then later on buy it back. You just better be right. Now, the nice thing about the stock market, if I'm right, great, wonderful. If I'm wrong, I have the opportunity to roll it into the next week and try again. Because I'm here at 140 at 44. Okay, that is never ever. I'm going to open this up a little bit more. Open up a little bit more. There we go. Okay, what is never ever ever going to change is my purchase price. Okay, my purchase price right there, $43.92. No matter what I do, the only way that's going to change is if I buy more stocks and do what is called dollar cost average down. Okay, so if I own it at 44, then I buy some at 37, they'll meet somewhere in the middle around 40, 50, or 41, somewhere in that area. That would be my average. The only way to change that is to dollar cost average down. I don't plan on doing that. What I plan on doing is buying it back at 3 cents. I sold it for $2.89. I'm going to buy it back at 3 cents. Then I'm going to turn around, because it's way down here, I'm going to turn around and sell the 40s. And the 40s are going for 41 to 63. So that is another 1.25%, 1.5%. Well, I'm okay with that. But is it going to hit 40 between now and next Friday? Probably not. But if it does, I will just roll it into the following week, and I'll roll it into the following week until I until I get the target price that I'm looking for. What's that? Well, it's 44. I bought it at $43.92. I have every intention on selling it at 44. That's it. But I'm going to do it every single week until it goes back up to 44. And every single week, I'll bring in 1, 1.5%, 2% every single week until I hit my target. So when I say never buy something unless you're okay with owning it for a while or understanding it, however you want to interpret it. If you don't understand the stock, which means there is a 52-week high, a 52-week low, which means I can buy it here and it can drop 50%. You have to be okay with that before you do anything, because it can and it probably will happen at some time. Stocks only do 2 things. They go up, they go down. They do not come to your house and make you dinner. They do not take the dog out for a walk. They do not make your bed, put the little candies on your pillows. They go up, they go down. That is it. So if you're going to buy a stock, well, keep your eye on it. What is it doing today? Does it really take that long? No, it doesn't. As a matter of fact, just for the fun of it, I have some U.S. Steel. Okay, I got it at 41.25. So really, I'm going to show you how quick this should be. You ready? U.S. Steel. Okay, high, low, where was it, where is it? I get it at 41 right there. Right now it's at 37. Okay, I sold off right down here. I sold off this option right here. Okay, great, fine, wonderful. Yeah. That's it. Push it off until next week. Nothing to do today. Because it's not up to the 41. And whatever I sold, what did I sell it for? Okay, I'm into it at 41. I sold off the 32s. I pushed it forward all the way to the 20, which means it's going to expire this week. But look what they paid for it, $6, which means I'm not losing anything. Okay? But I am trying to push it forward to next week. I have a working order right there. 19. Right now it's a little bit skewed, so I'm not going to do anything today. But I am definitely going to do something by Friday. Because look at the numbers. Okay? I'm entered at 41.25. It's currently at 37. The 41's way up here, not even close. But I sold the 32s, which are way down here. But look what they paid for the 32s. $6.02. So if you add the 602 to the 32, whoever bought this option, their break even is 38.02, and it's not even close to that yet. So I'm not at risk of losing anything until it goes over 38.02. Make sense? Because right now it's at 37.75. I'm not at risk until it gets to 38.02. Well, we're into Wednesday. So we have Thursday and Friday. This option expires on the 28th, which is this Friday. So this Friday, I have to do something. Okay? Now, the market maker will take it at 32 if there's any value to it. So I'm going to push it forward to next week, and hopefully it's at the point where I can close that gap and still have a profit. I have no intention in selling it because it's bringing me in more than 1% every single week. So if I have a stock that gives me 1% every single week, why would I get rid of it? It just makes no sense. All right, anyway, let's take some more questions. Sean Grady, you're in reverse. Yeah, I understand that, Sean. Okay, we're on YouTube. Okay, this iPhone camera does not give me the opportunity to reverse the screen, to mirror the screen. So unfortunately, it is what it is. Out of all the cameras I have, only one has software that allows me to mirror the image, and that's on TikTok. Okay? Okay, so bearded dad dude, hope that answered your question. Okay, you just go and you sell whatever you have. See, if I have, I don't even know how many shares. 3,200 shares. So I got 3,200 shares. So come up here. Like here. Find the one you want to sell. 8. Right now the current price is 38.53. I want to look at the 39s. The 39s are right there, 70 cents. That's more than 2%. Click on that. How many shares do I have? Let's get rid of this. I don't need that. I got 3,200 shares. There's just 32 contracts. Okay. Put in the 32 right there. Okay. Limit order. Now, I want to do a limit order when I'm selling something on something I already own. Now, when I'm jumping in, I want to do a market order because I want it filled instantaneously. But a limit order, okay, when I'm selling against something I already own, it has to be a limit order for me because that's what I want. See, right now, the current price for this one is 70 cents a share. So if I hit confirm and send, okay, this is what I'm going to make on that one, $2,200. Well, that's more than 1% of the position that I'm in. So that's a yes for me. Okay? And then you just hit send, and that will fill first thing in the morning. Okay, so let's go back to here. And let's go back to here. And let's go back to, oops, right there. All right. Questions. Sean Grady. Also, there is no title on the YouTube screen to know we can only suggest dividend stocks. You're absolutely right, Sean. If I knew how to do that, I probably would have. Yvonne, how are you today, Yvonne? Yvonne. That's why you be active while you're young. You're absolutely right. I'm in India. Namaste. Whoa. Don't do market orders, dude. Okay, Sean? Just work the limit. Yeah, I don't do limit orders when I'm entering. When I'm entering into a trade, it's a market order because the stock order and the option order are tied together, and I already know what my order is going to be. So for the fun of it, let's do US Steel, and I can show Mr. Sean what I'm talking about. 37.75 is the current price. So I'm going to do the 38s, and I'll just walk you through it and see what it looks like. Let's get rid of this. Let's get this and change it to covered stock on the 38s right here. Okay. Now, I want to change it to one contract, just one. And I want to do a market order. Now, there's a reason why I want to do a market order when I enter. Okay. The stock and the option, the stock trade and the option trade are included in one trade. So it's two trades in one. I'm buying the stock and I'm selling the option at the exact same time. So I'm buying it at the market at the open, and then I'm selling the covered call at the market at the open at like a fraction of a second later. So you already know what I'm going to make before I do it. It's one of the few trades where you know what your profit is before you even do it. So buy one covered call X US Steel 100s, that is the weekly, which means it is going to expire on the 7th of March, which is next Friday. Okay, the $38 call, because remember it's at $37.75. The closest one's going to be $38 at the market to open. Well, here's my maximum profit, $104. See, I already know how much I'm going to make before I even do the trade. So yeah, I want a market order when I'm buying. When I'm selling a covered call against a position I already own, then I will do a limit order. Okay, so 104 is the current profit on this trade right here. So 104, and I want to divide that by the cost of the trade, including commissions and fees. You're going to love this one. Watch this. 36.96 divided by 36.96 and 66 cents gives me a grand total of 2.81%. Well, 2.81%, that's over 120% per year. Let's multiply that by 52. 140% per year. Well, that's nice if you can get 2.8% every week. But that's not what I wanted to show you. Now, I have a margin account, which means I have a certain amount of my money, and then I borrow some money from my broker. Now, you guys really shouldn't do this until you understand the risks involved. But risk, reward. Well, number one, it's the safest trading strategy there is, covered call. The safest one is just buying the stock, but there's no profitability there because you have to sell something in order to get a profit. So the covered call, I'm buying it at 37.75. I'm selling somebody the rights at 38, and that's what I'm collecting. All cash would be this number right here. We already saw it, 2 point something, whatever it was. But here, look at this. Buying power effect, 1,789. What does that mean? That means I have a margin account. Wait till you see what the numbers look like on a margin account. Now, the profit's still the same. It doesn't change because the order didn't change. The only thing that changes is the fact of whether I have a cash account or a margin account. And let me repeat it again. Do not do a margin account until you understand the risks involved. Okay, because you have to borrow that money and you have to pay to borrow that money. So never borrow any money until you know exactly what you're doing. Okay, so 104 is the profit. You can't argue with that. That's the number it is. Okay, now to find out the rate of return, how much is the investment? Well, here on margin, it's 1,789. 1,789 and 65 cents. That gives me a rate of return 5.8%. Now that's for 1 week. Now I don't know about you, but I like the idea of a 5% trade for 1 week. So yeah, if I have the ability, I would buy some more US Steel when the time is right. So let's go back and see exactly where US Steel is. Okay, so 30 days ago, we're right about here, 36.50. We shoot up, drop back down, 1, 2, 3. Now today, what would have been the third day? Say 1 day, 2 days, 3 days. Okay, she opened up lower. So not an ideal time to jump in. Now, if tomorrow she's higher, that would be an indication to jump in. For me, you guys got to figure out what's right for you. Okay, so we're almost at 11 o'clock, which means we have another half hour to go. So let's look at some more stocks and just stop this yabbering. Where else do you guys want to take a look at? Oh, unless super liquid like SPY. I don't do SPY. Sorry, Grady. I don't do spiders. Do I offer classes? Yes, I do. Sean. Or buy an at-the-money call and sell an at-the-money put synthetic. Yeah, okay, Sean. Now, when I say, Sean, listen closely. The trading strategy I am showing here was created for my 9-year-old daughter. I showed you the video of her. That was 15, 16 years ago. She's going to be 26 this year. Holy shit. Needless to say, okay, it had to be simple, safe, predictable, consistent, and no way for her to lose. So what you're talking about right there, buy an at-the-money call and sell an at-the-money put synthetic, yeah, that's going to be confusing as hell to a 9-year-old. So, sorry. Now, I understand what you're talking about. And I'm sure there's some people out in the audience might understand what you're talking about. But I don't want to get complicated. I want to keep, it's basically the exact same thing I showed you in the video from 15 years ago. Okay, look at the 90-day chart. Look at the 1-year chart, the 90-day chart, the 30-day chart. Does it make sense? Do the numbers work? Now, if you really want to, we could get into the at-the-money, implied volatility, the Black-Scholes pricing methods for standardized options. We could get into all that crap, into the Greeks. And a lot of people won't understand it. And then the audience will just disappear. It's like, what the hell is he talking about? No. Simple, safe, predictable, consistent, 1% per week. Now, if 50% per year is not enough for you, then you're definitely in the wrong place. Because that's all I'm doing. And yeah, I know how to make more money sitting in front of my computer longer. I just have no desire to do it. Okay? You get to a certain point where money is not the motivating factor in life anymore. So for me, motivating factor is free time to do whatever the hell I want to do. Now, I do honor my commitments where I am here every morning for the trading group, and I do record every single night and live broadcast every night, except for Fridays and Saturdays. Last year, it was every single night. And this year, I take off Fridays. It's still difficult for me to do nothing on a Friday night. It's like, I want to go online. And it's like, no, I'm going to take the day off. Anyway, besides the point. If it ain't broke, don't fix it. If it's working fine, leave it alone. But you are right. Okay? Doing what you're saying would make a little bit more money, would be a different outcome. I'm not looking for a different outcome. I'm looking for simplicity, safety, predictability, and consistency of profitability. I like all those Lees. They're a wonderful crowd. You know. All right, so let's keep on going. Capital efficiency. Thank you, Sean. Do I like GT? What the heck is GT, Michael? GT. It's not ringing a bell. And that's why. Okay? It's not ringing a bell. because it's a monthly optionable stock. Now, I don't do monthly optionable stocks because the numbers just don't work. Now, when I say rule number 1, never buy something you don't understand, so how can you want to look at something that you don't understand? Because rule number 4, weekly options only, and this doesn't have weekly options. So when I say never buy something you don't understand, why are you having me look at something that's automatically going to be a no? Because the numbers on monthlies just don't work unless I sit in front of my computer looking at setups. Yeah, I don't want to do that. Okay, simple, safe, predictable, consistent. No, monthlies just don't work. So let's keep on going. James, the time decay on option, does it decay by the hour or by number of day? If the day would be, it'd be better to just have a call at the end of Monday. You're right, but it is by hour. Okay, the Black-Scholes standardized pricing method of options, it is a huge mathematical equation. And time from right this second until expiration, the clock is consistently ticking. So every tick tock, yet the value of that option goes down only in time value. You got intrinsic value, you have interest rates, you have stock value, you have applied volatility. There's a lot of crap that goes into the pricing of standardized options. But yes, time value consistently ticks away. And the most amount of time value you're going to get on a weekly optionable stock, Monday morning, 9:30 a.m. until expiration date, which is 3:59 p.m. Friday afternoon. Now, the option doesn't expire until Saturday, but you can't do anything after 4 o'clock on Friday. So it's really irrelevant. So let's keep on keeping on. Great explanation of covered call. Thank you, James. Sam, Archer Daniel Midland, can you please take a look at this? We looked at Archer Daniel Midland for the past couple of days. ADM. Okay, you missed the run-up. Okay, you should have got it last week. Because here's your bottom. You can't get any lower than the bottom, and that's where it was 2 weeks ago. She went up. Today she started to pull back. So I'm not quite sure what it is you want to look at, because it's not a good time to jump in after that big pullback right there. What's up, James? Listen to you while at the gym. Sweet Jones, cool beans. X isn't at the top of your favorites list. Why not? Well, it's on my list. Do you have a PDF about your techniques? Yes, I do. Do you offer courses for beginners? Yes, I do. That's what I'm working on. Congratulations, living the way you want and living your dream. Not quite my dream. I want to eventually. I bought a motorhome. A big fucker. But nobody wants to go in it because it's so freaking big. Says, I don't want to drive in this thing. It's huge. So I'm going to get a smaller motorhome and drive around the country. But my main thing, what I really want to do, is get a boat and convert it to electricity and take it around the Great American Loop. One port at a time. Just going, taking my time and just going all around the Great American Loop. If you don't know what it is, there are a lot of videos on YouTube. It's the waterway between the eastern seaboard, okay? You know, the eastern part of the country. So you have the Mississippi. So you go up the eastern seaboard through the Great Lakes, down the Mississippi, into the Gulf of America, and then you go back around to the Florida. Now, you can cut through Florida, through the Everglades. Well, that's cool. Or, I don't know. But anyway, that's what I want to do. And that's what I'm striving for next week, the week after. But, you know, Mom's at that age where someone has to take care of her, and someone has to go there, and someone has to do this, and someone has to do that. And it's like, you know what? I got nothing else to do. She is my mom. Who knows how much longer she's got? So I'm hanging around for that. After that, and then, yeah, probably I'll get a boat and float around. Okay, so, yep, thank you for that. AAO app trading. Okay. Check out Nano Coin, please. No, I don't do coins. I don't do crypto, sorry. Getting old is the goal. No, I'd rather stay exactly where I am. Sergio, the only crypto you can send without any fees. I don't care about crypto at the moment. Hey, Steve, when rolling a stock position, will the think or swim trade read diagonal in the description? Yeah, sometimes the reading when you're moving a trade forward, sometimes it'll be called a calendar, sometimes it'll be called diagonal, sometimes it'll be called double. It depends on what you're doing. Okay, now we can talk about this because Steve, you're in the morning trading group. We can talk about this in the morning, and I can show you examples. Free speech and other stuff. Why are you not selling puts to get into stocks? Well, free speech and other stuff, specifically because it's not simple. Okay, so when I say I created this for a 9-year-old, it had to be simple, safe, predictable, and you're talking about another strategy. Now, I do sell covered puts, but I don't do it here. There are so many different trading strategies. I could go into all of them, but that will overwhelm a lot of people. And that's not what I want to do. I want to introduce a simple, safe, predictable, consistent strategy so people can have an opportunity to make, 40, 50% per year safely. Now, the selling the cash secured puts, yeah, that's part of the wheel strategy. It's a great strategy. But I have to draw the line somewhere. What am I willing to give away for free consistently? Well, if 50% a year is not good enough for you, I really can't help you out. Okay? There are other strategies I do, but I'm not going to give them away for free. So, it is what it is. Advanced Auto Parts is going out of business in Los Angeles. Okay. Advanced Auto Parts closing 700 stores nationwide, not going out of business. Okay. Contradictory information right there. Here again. Wow, Blur, what's happening? Question is, better to buy low or high? Alrighty then. Can we look at WMB? What the heck is WMB? WMB. Williams. Never heard of it. So why is I never heard of it? WMB. Well, look at that. Now, 2010. I was getting a little excited there for a second, but 2010. Do you know what that means? That means they've only had, now I haven't seen whether or not they increase consistently or not, but they only have 15 years of dividends. Now, we don't know if they are increasing. We don't know if they're decreasing. Well, let's take a look. But the reason why I had no idea who they are, because they haven't got to the 20-year mark. They're only at 15. And I don't even know if they consistently increase. So when I say if you're going to trade, you need to get access to a financial website so you can check out statistics. You can check out factual numbers. Well, this is Yahoo Finance. It's free. It doesn't cost anything. Now, I want to see how consistently they increase their dividends over the last 15 years. So here we go. 2010, 10 cents, 16, 20, 30, 31, 33, 34, 35, 37, 38, 40, 43, 56, 57, 58, 59, 64. 2016, we're at 64. 2017, wait a minute, beginning of 2016. Okay, March, 64. June, 64. September 2016, 20. That is a 60. Did you hear that? 60% decrease in dividend. Why would I want to invest in that? Seriously, ask yourself that question. If you are going to take your money and you're going to give it to some CEO or some financial officer, don't you want them to be consistently profitable? Well, look at here. If a dividend is a portion of the profits they share with their shareholders, okay? So if I'm going to get, let's say, 1/100th% of the dividend, and it's at 64 now, and tomorrow it's going to be 20, that is a 66% drop. Well, somewhere around 66% drop. Why the hell would I want to put my money there? It's a simple question, okay? It's not on the list of the companies I like. Now, what are those? Dividend Kings. 54 companies have increased their profitability for more than 5 decades. That's 50 years. Dividend Aristocrats. Consistently profitable for 25 years or more. And then you have the Dividend Champions. 150 companies consistently profitable for 25 years or more. And then you have the Dividend Contenders, which increase consistently year after year after year after year. None of this crap 64 to 20. No. You have to increase your profitability every single year in order to make the list. That's why I've never heard of this company, because they've decreased their dividends back in 2016. So, no, I don't want to put my money into a company that's not consistently profitable for at least 2 decades. There's about 300 of them. Why would I choose this one? No, sorry. So let's keep on going. What do we got? 11:15. So we're going to go to the questions, and let's go see what we have for questions here. Can you show, okay, we already did that one. Any additional criteria when you already own the stock? No. Okay, just remember a few things. Number one, never buy something you don't understand. If you don't understand every aspect of the stock of the company, you shouldn't be buying it. You shouldn't be putting your hard-earned money into something you don't understand. It just doesn't make sense. It boggles my mind. Like this one here. If I knew that this dropped their dividend in 2016 by 60%, I wouldn't be buying it. Okay, so I don't know why we're looking at it, because the criteria is pretty easy. New Jersey 78. What if Dell goes down? Well, of course Dell is going to go down. Do you lose on the price of the 100 shares? No. New Jersey 78. Okay, understand one thing. When you buy a stock, you own it until you decide to sell it. Well, let me rephrase that. If you buy a stock all cash, it is yours. If you buy it on margin, it is only 50% yours. Because if it goes down, you lose your money before the broker loses his. So if you buy it all cash, it means it's all your money, no margin. You can hold that thing until it drops all the way down to 2 or 3 cents. As long as you never sell for less than what you paid for it, there's no possible way you can lose. Okay, now I love Dell, because as Dell goes down, yeah, I will sell covered calls in it, and I will lower my covered call price that I sell. But I want it to be far enough away from where the action is so that I don't get called out. And then I look at it twice a day. And if needs be, I will set an alert that gets sent right to my phone. Oh, the stock just hit this price. What do you want to do? That's basically what the alert looks like. Okay, so stocks go up, stocks go down. You are going to buy something and it is going to drop to the floor. It just is. I mean, you do it long enough, you dance to the music, eventually you're going to pay the fiddler. Stocks go up, stocks go down. Just because you buy it does not guarantee it's going to go up. Okay? Sweet Jones, what day do you roll a covered call when you're selling covered calls for a lower strike price than your purchase price? Okay, Sweet Jones, I'm going to tell you the same thing I tell everybody who asks me a question like that. All depends on the numbers. Because it's a numbers game. Certain numbers are never going to change. What I bought it for, that's never going to change. Okay? Now, the current price, let's get out of this. Okay? Now, as you can see, the stocks go up, down, up, down, up, down, up, down, up, down. That consistently changes. But what you paid for it never changes. So if you know what you paid for it, and you know what the options are going for, and you sell something enough to give you some cash flow coming in, but not put yourself at risk of losing, and then you just watch it every day. Okay, it's your money. If you don't watch it every day, what do you think could happen to it? All right, so let's keep on going. Bear Dad, if you have a current call, yes, it would be under single. Yep, correct. Just own the stock and you can sell another call next week. Yep. Okay, keep going. What about losses? Saltini, how are you today? Well, I have no losses this year, but when I have one, I'll let you know. But until then, I try to avoid all losses. Now, you got to remember, when you buy something, it is yours to do with as you please. If you decide to sell it for less than what you paid for it, that's on you. I have no intention whatsoever to sell anything for less than I paid for it. That's my intention. Okay, so I'm going to see this year how long can I go with 0 losses. Now we are into week number 9. Actually, we come to the end of week number 9. I think, is that right? Yeah, week number 9. So next week is week number 10. There's 13 weeks in the quarter. Okay, we got one more month. Okay, this Friday is the end of February, which means the 3rd month of the first quarter, or the tail end of the first quarter, starts next Monday. Well, I have 0 losses so far this year. Jeremy, Jemnich, I'm going to ignore that question if you don't mind. Just be cautious to sell calls enough out of the money so you avoid assignment. KG, you're absolutely right. I couldn't have said it any better. Saltini's only loss if you sell, you forgot part, if you sell less than what you paid for it. So you pick your stocks you're willing to hold. I couldn't have said it any better. Hey, Quantum Realm, I was thinking about you. That's disturbing. I hope it's good. Oh, I don't want to know. Okay. All right, Gerald, do you think Dell will have any kind of positive turnaround by year end? Okay, so Gerald, I honestly don't know. Now, I'm a weekly trader. I buy on Mondays, I sell on Fridays. I really don't think of what's going to be happening towards the end of the year. I want to live for the moment, which is today. Okay, I like to have set up for tomorrow and the next day, 1 week at a time. I don't plan my life on between today and a year from now. Nope, I go from today until Friday. I enjoy the weekend, and then I do the whole thing again, Monday to Friday, and I do it again. Do you like Volkswagen or Goodyear? Nope, don't like either one of those. Check the numbers, Michael. Check the numbers. Garrick. Oh, wait a minute. User, what's his whatsy? What's like a Pfizer? Okay, it's past 11:20, so I'm not going to look at any more stocks. I got a whole bunch of questions to go through, so I want to apologize for that. 'Cause I'm here every night at 9 until 11:30. So at 11:15, I stop looking at stocks and I just answer questions. I hope that's okay. Tomorrow's another day. We'll be here again tomorrow. Yes, I actually did some trades on Altria, which is MO. Missed that. Bill, Sandy, Boxner, back again. Berg, the investor. You're new here. I don't remember that name. Quantum Antenna. Okay. Thanks for that, Quantum Antenna. If you don't own the stock when dividends are paid, do you still get the dividend payment? No. Okay. So DML Jamal, you only get the stock. Okay, hold on. That's something worth looking at. Okay, WMB. All right, we're just going to take a look at WMB for a second. Okay, WMB has a dividend of 50 cents. Okay, right here. Right there, dividend amount. Now, there's 4 dates to remember when you're talking about dividend stocks. 4 dates. Date number 1 is the announcement date. Hey, this is James from Dividend Stock Talk. This is how much money we made this year. This is what dividend we're paying, and this is when we're paying it. Well, a date number 1 is the announcement date. How much we made, when we're paying it. Date 1. Date number 2 is the EX dividend date, the last day the stock trades before the dividend is paid out. And on an EX dividend calendar, that is represented by a little green dot. Okay? If I want the dividend on WMB, I have to buy the stock before the 14th. That means the 13th, the 12th, the 7th, the 28th, the 4th, the 11th, the 10th, whatever, as long as it's before this date. Okay? Date number 3 is called the date of record. Whoever owns the stock on the date of record is entitled to the dividend, as long as you own it on the date of record. Now, you can sell the stock the very next day after the date of record and still collect the dividend. Date number 4 is the payment date, when you actually get your money. Okay, that's simple. 4 dates. Buy it before the EX date, hold it past the date of record, and then do what you want with it. Do you have training videos, and are these it? Well, here you can ask any question you want. Marco, UPS. I love UPS. I don't have any because I sold mine. I put 2,000 into QQQQM, 1,000 into SPLG, and 8,000 into SPY. Think that was a good investment? Well, Jojo, I know absolutely nothing about you. But the only stock there, or the only ticker there I actually know of, is SPY. Now, Jojo, I'm going to show you something, and you're going to be extremely depressed about it. Okay? And maybe it's time for someone to show you, and for you to get extremely depressed, because then you'll be saying, shit, I should have done more research. Let's pull up SPY. Okay? Here we go, SPY. Now, just for the fun of it, let's go back 20 years for SPY and see how wonderful they pay their dividends. Okay, 2005. Are you ready, Jojo? Okay, listen closely. Now, consistency of profitability means, to me anyway, I could be wrong, is that every single year the profits get higher and 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 higher. So every single dividend should be higher than the previous dividend. Okay? 1, 2, 4, 9, 11, 15, 18, 27, so on and so forth. Okay? Let's take a look at SPY and what their dividends look like. Okay, Jojo? Hold tight. It gets really bad. All right, 2005. Now, the reason why I'm starting at 2005, because that's 20 years. Because I am 61 years old. I want to make sure anything I buy has at least 2 decades of consistent profits. Spider ain't one of them. But let's check so you can see yourself. 20 years ago, 47, 49, 52, 67. Oh, look at that. 4 of them in a row. Up, up, up. Look at number 5. 67, 52. Hold on. That's backwards. Wasn't it supposed to be higher? Okay, that's 4 steps forward, 1 step back. That's not what I signed up for. But hold on. It gets worse. 56, 58, 79, 55. Backwards again. 66, 72, 78, 64. Backwards again. 67, 69, 72, 56, backwards again. 52, backwards again. 51, backwards again. Do you see where I'm going with this, Jojo? Okay, 2 steps forward, 1 step back. 3 steps forward, 2 steps back. Not consistently profitable. So the question would be, at this moment in time, what the hell are you thinking? Putting your money into an entity that's not consistently profitable. But hold on. Give you the benefit of the doubt. It actually gets worse. We're going to go to the summary. I'm going to skip the rest of it because it does the same thing. I've been doing it long enough to know it does the same thing. Up, down, up, down. No consistency in the profits whatsoever. Okay, so here is the summary page. Now, the summary page gives you information that should give you a good idea of whether or not you want to buy this. So I'm assuming, Jojo, that you missed this step. Here's Spider right here, S&P 500 ETF Trust. Okay, you're basically giving your money to a computer saying, here, you do it for me. Well, I'm about to tell you what that computer is going to give you. You ready? And don't give me the crap, it's an electronically traded fund. It is. Because if you go to the what do you call it, to the stock exchange, you'll notice it's all freaking computers, which run on electricity. So yeah, it is a computer-generated, it's electronically traded fund. Anyway, you ready, Jojo? You're going to hate this. The yield. 1.17%. 1.17%. That means for you to double your money, it would be somewhere around 68, 69 years to double your money in the S&P. I mean the SPY. 1.17. Now I'm showing you how to get 1% every week. 1% every week is over 50% per year. But no. You want to invest at 1% per year. Explain to me why you think that's right. Okay, I don't do the S&P, the SPY. Okay, I never heard of SPLG. Never heard of, what's the other one? QQQM. QQQM. Give it a second. $211.88 a share. I never heard of it before, but look at what it's given you. 0.59. Do you have any idea what 0.59 per year looks like? Dude, drop me a number. We got to chat. You got all your money into something that's giving you 0.5% a year, and then you have money into something giving you 1.1% per year. I don't even want to look at the other one, because these two are... All right, you know what? Never mind. It's not for me to say what you do with your money. I would just say I would never do it. All right, let's keep on going. So you're not making money on the dividends. I was confused. Okay, Gemnich, I'm only using the dividend as a precursor to tell me when to buy the stock. Okay, so first and foremost, I look at the 300 companies. Okay, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's about 300 companies. I then take those. And put them in a calendar, because the calendar will tell me when to look at it. Okay, so when I'm looking at it, let's pick one. Oh, J&W, Nordstrom's right there. The 11th of March, see? Nordstrom's. If I want to buy Nordstrom's, because Nordstrom's has a tendency to go up in price 2 weeks before the dividend. So if I know that ahead of time, I can set up to buy 2 weeks before on a Monday, which is the 24th. Okay? So I buy it on the 24th. And I sell a covered call, get my 1%, okay? If on Friday, the 28th, I'm in a profit, great. I'll get all my money back, and then I'll pick another one on the 3rd. If not, I'll sell it again and pick up another 1 or 2%. So I get 1% here. I'll get 1% here. I'll get 1% here. I'll get the dividend here. And then if it doesn't hit my target, I'll keep doing it and keep getting 1% every single week. Okay, so I have no desire to get the dividends. Now, when I do collect dividends, okay, it's kind of like extra frosting on the cake. Okay, we're at 11:31. I'm going to blow through the rest of the questions. Let's see what we got here. Starbucks. Love Starbucks. Just Joe. Love Starbucks. Okie Goat Farmer, I visited your site. What is the difference between joining here and Patreon? Well, here you only get information that's shared here. You don't get access to the live trading that happens through the Zoom call, which you get the link in Patreon. That's the difference. Sherry, yeah. So, my kid, Sherry, my kids kept giving me a hard time. Open the envelopes, open the envelopes. I said, no, I don't want to. I want it to live in my mind and keep it. But then I saw this nice, beautiful motorcycle. I says, oh, yeah. I'm sure Sherry would love for me to have that. So that's where it went. I'll send you a picture later on. Thoughts on VGRO? Never heard of it. Oh, this is all for you, 22. Cool beans. You know what? You and I should chat. Drop me a number. Now, this is for anyone. Drop me your phone number. I will give you a call. I don't do WhatsApp. I don't do Telegram. I don't do Forex. I don't do any of that other stuff. I only do what I am saying here. So if you get an email, you get a text, or you get anything from somebody saying it's me, if you don't hear my voice at the other end of the phone and on the video, because I do video calls with people, say, well, I don't really trust this, I'll stand in front of the camera and talk to you one-on-one, Anyway, let's keep on going. Can you teach us the calendar option? Yes, I can, Mark. Not here. How would you compare stocks to Forex? Because Forex you can trade any time of day. It's all reactionary. You cannot plan for movements in the Forex market. Okay, what you're talking. Okay. Keep on going. Thanks. I'm going to check it out with your page with my 16-year-old. Mary June, don't be surprised if your 16-year-old gets it quicker than you do. I'm up on Ryla. Mark, the realtor, Ryla O'Reilly. Oh, I'm up on Riley too, in one or two accounts. Explain when you sold the X32 call and why you sell so deep for the risk. Okay, Secretariat. Okay, you've been here long enough, dude. Now, I seriously don't know why you don't join the morning trading group, because if you did, you would know why and when I sold US Steel at 32. Because a few weeks ago, it was down below 32. That's why I sold the 32s. And then she went up, and I couldn't get out of the 32, so I just kept rolling it forward. Why just dividend stocks and not other weekly option stocks, non-dividend? Okay, so Giwalo, I'm not quite sure if I said that right. Sorry, it's not a normal name, but it may be normal where you're from. Terribly sorry, don't mean insult. No, why not stocks that have no dividends? Okay, did you not hear what I just said about the EX dividend chart or the EX dividend calendar? Stocks, dividend stocks, have a tendency to go up in value just before they pay their dividend. That's the key. You've got to figure out when is a stock going to move. If it has no dividends, you need another signal to tell you when a stock's going to move, other than sitting in front of your computer every single day. And if the stock goes down, and they do go down, what are you collecting as the stock's going down? Nothing. No dividends, no profits. Okay? UVV, love it. What does roll position mean? Okay, New Jersey 78, roll position means if I have an option trade where I buy a stock, I sell an option, which is basically an insurance policy giving somebody the rights to buy it from me at a certain price by a certain date. Okay, that's all that means. Rolling it forward means if I did a option trade on Monday, I bought a stock, I sold a covered call against it. If the stock drops or shoots up, in order to avoid a loss or to gain some more money out of it, I will buy back this week's option and then I will sell next week's option at the exact same strike price, or I can change the strike price. That is rolling everything into the next week. So if I sold, well, let's go to one right here. Okay. This is WMB. Okay, so if I sold this one right here, the 56, for next Friday, the 7th of March, see it right there, 7th of March, and I collected $1.60. If the stock drops, I can change it. Wait, hold on. I can buy it back and sell the next week the same one. That gives me more time. Well, what do I need time for? Well, for the stock to move up or down, depending on where your position is. It's always a numbers game. Well, if I bought it at this price and it's here, well, do I let it go? Do I roll it forward, pick up a little bit more money? Or do I just, move on to the next stock? It's always going to be about the numbers. Where is the best? Where is the safest? Where is the most predictable place to have a consistent profit for my money to be? Your money has to go somewhere because you're going to retire at some point and your money has to come somewhere. Because we're the only species, the only critter on this planet, on this little rock, that has to pay to live here. We got to pay to live here. Where's that money coming from? Well, if you're working, you know where the money's coming from. When you retire and you no longer work, where's it coming from then? Social Security, are you really going to rely on that? Are you really going to give your money to someone else and let someone else be responsible for the way that you live? Or are you going to do it yourself? I can almost guarantee nobody has the same amount of interest in your money than you do. So why would you give somebody else responsibility for your money? It's not that difficult. It was created for a 9-year-old. Now, I love my daughter dearly, but it was created for a 9-year-old. If she could do it, why can't you? All right, anyway. Okay, Bruce. Bruce, I appreciate your input. Okay, now you're new here, Bruce, because I would understand. I would recognize that name. My best friend in high school was Bruce. He lived a couple of doors down. He'd stop by every morning. We'd walk down to the bus stop. Yep, we used to walk to the bus stop, quite a ways. It was like a quarter mile from Bruce's house to the bus stop. We had to walk every day. Yep. So anyway, you're talking about something, strangles, condors. Yeah, no, I don't do those here. Okay, I do one trading strategy and only one. Tracy, how you doing? Nice to see you. I'm getting ready to say goodbye, but, thanks for showing up. Okay, Popeye EPD, we looked at it already. If your contract is in the money, do you roll it position? Yes, I do. Keyword is no. Absolutely wise family living. Hassan Hood, I'm assuming you're talking about either Robin Hood, which is going to be a no because they haven't been around for 20 years yet. Have you done a double dragon? No, I have not. And I'm going to be 100% honest with you. Never heard of it. But here's the thing. I have no interest in finding out what it is. Because what I'm doing now works perfectly fine for me, and I have enough things on my plate. I don't want to have to learn something else. Okay, Popeye, we looked at EPD already. It was a no for us this week. At Prenda and Live, I can't read that one. I only day trade stocks and make 0.5% to 1% of my money. Okay. Rolling head, fair enough. Stay the course, brother. Thank you very much. I appreciate you allowing me to be me and do my stuff because it works for me. Okay, if you find something, double dragon, if it works for you, great, wonderful. I don't want to have to learn something new. Okay, you can't teach an old dog new tricks if the dog is willing to learn a new trick, which I'm not. Okay, NJ78, thank you, New Jersey. ICP, ooh, yeah, sorry, I don't like Icon. Take a look at the numbers. Chicky Bicky. Now, Chicky Bicky, you've been here before. Okay, you know the rules. You really got to take a look at ICP and put it into Yahoo Finance. Okay, go to Yahoo Finance. Look at how consistent ICP is. Well, they look good now, but go back 15, 20 years. And their dividends were high. And then they started slowly dropping. Yeah, no. Austin, a little late, dude, aren't you? What platform do I use, Marshall? That is Thinkorswim and is owned by Charles Schwab. Oh, I'm at the list. I'm at the bottom of the list. Okay, we're almost done. Guitar Guy, I have traded SPY options. Well, trading SPY options is a total different story. I would not trade SPY because the numbers just don't work. Okay. Secretariat, I understand. X appears to have gotten ahead of you a few weeks ago. I've been ahead of it. Yep, it happens. I don't join the group because I still work and am very busy, dude. Still making money. Absolutely nothing wrong with that, Secretariat. You've been here for almost a year following along. Glad it's working out for you. All right. It's 11:42. I've answered every single question. So that means goodbye, good night, see you later. You guys have a great night. We'll see you again tomorrow. Okay, bye on Instagram. And now the end is near. And so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain I've lived.